Welcome. In this video, can Zbcn coin increase 350%? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
The Elliott wave theory is a widely used method in technical analysis that suggests prices move in specific patterns. According to this theory, market movements consist of 5 main impulse waves followed by 3 corrective waves. Looking at the current asset in question, the existing price structure strongly suggests that we are at the beginning of the 3rd wave of the 5-wave bullish formation. In other words, the first and second waves appear to be complete, and the 3rd wave now seems to be underway. This wave is considered the strongest and longest of all, typically providing the highest returns for investors. One of the key characteristics of this wave is its rapid momentum and strong buying volume. The second wave usually corrects the first upward movement, shaking out weak hands and allowing the market to regain strength. Therefore, by the time the 3rd wave begins, investors are more confident, market sentiment turns euphoric, and buying accelerates. This wave is typically at least 1.618 times the length of the first wave. In broader market conditions, this extension can reach as far as the 2.272 Fibonacci level. These levels are calculated using Fibonacci extensions and are frequently used by traders as reference points when setting targets. If the price begins to move from its current level toward these potential targets, a significant increase in value could be observed. In particular, a rise to the 2.272 level could result in an impressive price increase of around 350%. This represents a highly attractive opportunity for investors in the medium to long term. However, this kind of price appreciation doesn't occur randomly or by chance. The 3rd wave typically manifests through strong, well-supported upward movement, both in terms of volume and technical structure. The completion of the 2nd wave and the beginning of the 3rd wave is a crucial signal. It suggests that sellers are exhausted, the correction is ended, and buyers are regaining control. If the price begins rising from the 2nd wave's bottom with strong volume support, it confirms the beginning of the 3rd wave. If technical indicators also support the scenario, it further strengthens the confidence in a continued upward move. Another important point to consider is that the 3rd wave typically forms the clearest trend in the market. Prices tend to move upward with minimal interruption, and although short-term corrections may occur, the overall direction remains consistently bullish. Investors do not want to miss this phase. The 3rd wave often coincides with a wave of positive news, increased optimism on social media, and institutional investors expanding their positions. From a technical standpoint, most indicators and chart patterns tend to flash buy signals during this period. Another important factor during this bullish phase is that using Fibonacci extension levels as target-setting tools is a sound strategy. These levels provide references based on past price behavior and represent psychological thresholds in the market. The 1.618 level typically acts as the first major resistance, and some profit-taking may occur there. However, if the price breaks this level, the next target becomes the 2.272 level. Reaching this level not only represents a technical milestone, but also carries significant psychological weight, boosting investor confidence and reinforcing expectations for continued gains. Looking at the current market outlook, it appears that the price is in the early phase of the 3rd wave, and the upward movement is just beginning. This means that the major price actions are yet to occur. In other words, there are still opportunities for investors, and it's possible to enter positions in the early stages of the trend. Of course, it's important not to neglect stop-loss strategies during this process. While technical analysis may suggest a price increase, markets can behave unpredictably at times. Therefore, risk management should always be a priority. In summary, the current price action could indicate the beginning of the 3rd wave in the context of Elliott wave theory. This wave is known both theoretically and practically as the most profitable one for investors. Setting targets based on Fibonacci levels can be very helpful in navigating this phase. The 1.618 and 2.272 levels are particularly important target points in technical analysis. If the price reaches these levels, a gain of 200 to 350% could be possible, offering substantial return potential in the medium term. However, as with any investment decision, caution is essential. Technical analysis data should not be considered in isolation and should always be confirmed with other indicators. Market conditions can change quickly, and macroeconomic developments can have unexpected impacts on price action. For this reason, both technical and fundamental analysis should be considered together, keeping the risk-reward ratio in mind. Still, based on the current outlook, it is clear that the third wave is opening the door to a strong bullish movement and that this process should be closely monitored. But we can't base our analysis solely on Elliott waves. Let's take a look at the other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
The importance of certain peak points or resistance downs cannot be denied when interpreting market movements through technical analysis. These areas represent regions where buyers were weak and sellers were dominant in the past. Therefore, when the price approaches such a resistance point, investors focus their attention on this level because whether it breaks or not provides crucial clues about the next price direction. A similar structure is currently in play. The price is once again approaching a strong peak level that has resisted several previous attempts. This level is recorded as an area where upward price movements were halted and sharp selling occurred in the past. However, this time the situation may be somewhat different. The price is advancing toward this area not with just a superficial move, but by consecutively forming higher lows. This kind of structure indicates that the buyer side is strengthening, and the price finds buyers at increasingly higher levels with each pullback. This points to a much higher probability of a breakout above the peak area compared to previous attempts. If this resistance level breaks upward, a new structure begins to form technically. In technical analysis, the upward breakout of a significant resistance level means that area can now turn into a support level, allowing the market to start a new uptrend above this new support. This breakout holds not only psychological but also algorithmic significance. Many traders place stop orders or buy orders around these important resistance zones. When the price breaks this point, pending buy orders are triggered, increasing buying pressure and potentially accelerating upward price movement. At this stage, an event known as a short squeeze may also occur. Short positions opened earlier anticipating a drop from this resistance will be quickly liquidated once the level is broken. These liquidations further boost buying pressure, causing the price to spike upward more sharply. Additionally, new target levels begin to be identified on the chart following the breakout. The old peak point will now be considered the previous significant high, and evaluations will be made regarding new resistance zones the price can reach next. The formation of such a structure typically creates positive psychology among investors. The perception that the price broke the old resistance and can go even higher attracts new investors to the market, leading to a significant increase in volume. Rising volume suggests that the rally is not just a temporary reaction but the start of a stronger trend. After the breakout, the price usually performs a retest of the broken area. That is, the zone that previously acted as resistance is tested to see if it now works as support. If the price manages to bounce back up from this zone without breaking it downward, this move instills confidence in the market and can attract more investors. This could open the door to a stronger uptrend. However, if the retest pales, meaning the price falls back below the broken zone, then the breakout may be considered a false breakout. Yet, the current pattern of the price consistently making higher lows strengthens the likelihood that the breakout will be successful. Market sentiment is also important at this point. If the overall market structure is positive and investors are hopeful for the future, the broken resistance level can mark the beginning of a new upward wave. At the same time, since the price had previously reversed at this level, it has become a psychological barrier. Overcoming this barrier relieves investors psychologically as well as technically. Buying activity may increase with the thought that this zone has now been surpassed and new highs are possible. Such breakouts especially represent opportunities for large investors. These investors can execute high-volume trades by capitalizing on the market momentum. This increases both trading volume and price momentum. At the same time, this breakout can be highlighted in social media and news flows. As these news spread, new investors may enter the market, helping the rally reach a broader base. In conclusion, examining the current price movement shows that it is approaching a peak level that many investors consider a barrier, having resisted being surpassed before. This level is not only a resistance zone but also an important structure representing a psychological boundary in the market. If the price manages to break this area upward with strong volume and then successfully retests it as support, there is potential for a much stronger uptrend to begin. This breakout has the potential to open the way for new highs and can be a positive signal for long-term investors. Therefore, price movements around this area should be monitored very carefully, and when a breakout occurs, volume support should be observed and new formations should be technically confirmed or rejected. If all these signals proceed positively, the price may indeed clear the way and much higher levels could become technically achievable.
When we carefully examine the RSI indicator, it is clear that it has formed a quite stable upward trend over time. This structure is extremely important for leading indicators like RSI, which often give signals before price movements. Because these kinds of rising trend lines in RSI usually reveal the underlying strength and the direction of momentum in the market. Especially when the RSI value reacts each time it approaches this trend line, meaning it bounces upward or reverses. This indicates that the asset continues to find buyers in the market and that upward movements may be supported. In the current chart under review, the upward trend line formed by the RSI over time is quite clearly visible. This trend line is created by connecting previous low points of the RSI and confirms that the indicator has gained upward momentum over time. Such a rising trend line shows that investor sentiment has turned positive overall, selling pressure remains limited, and the market has the potential to strengthen. RSI is generally considered to enter an oversold zone when it drops below 30, and reversals are expected from these levels. However, a more sophisticated signal to consider here is the RSI's own rising trend line. Every decline toward this trend line also represents a possible reversal point for investors. Currently, the RSI indicator is quite close to this important rising trend line. This area has served as support for RSI multiple times in the past, and each time RSI touched it, it bounced upward, forming new highs. Such a pattern holds a significant place in both technical analysis and investor psychology. When investors recognize such clear structures, they generally take long positions as the trendline approaches. Naturally, this creates upward pressure on the price and usually results in positive movements. So, RSI touching this trendline once again and bouncing upward from it could also lead to renewed momentum in the price. From this perspective, the RSI's movement in this area is not limited to the indicator itself, but can also create a significant upward jump in the price chart. Given RSI's current position, it seems highly likely that, as in previous periods, it will touch this rising trend line and bounce upward. This is a strong positive signal from a technical analysis point of view. If this scenario occurs, the RSI value could show an upward move again and start advancing toward previous peak levels. Such a move also indicates that buying pressure in the market is strengthening and allows prices to continue moving upward. Because the RSI rise shows momentum has shifted back to buyers and that the market is gaining upward strength. Moreover, RSI's touching and reacting to the trend line can be a critical signal not only for short-term but also for medium and long-term investors. These strong technical formations are generally reference points that investors trust when setting strategies. Taking positions near the RSI trendline offers investors an advantage in terms of risk-reward. A stop loss can be placed just below the RSI trendline to protect against possible downward moves, while the upward potential remains quite wide. This makes it a strategically good opportunity for investors. In addition, RSI's possession of such an upward trend structure indicates strong upward momentum in the overall market structure of the asset. This is usually seen in the early stages of bull markets. In other words, these kinds of trend structures formed in RSI before prices have started a major rally can be an early sign that prices might make stronger gains ahead. The rising RSI trend signals deepening buying pressure in the market, while also indicating that declines might remain limited. Because when the RSI value rises alongside gradual price corrections, it points to a healthy bull market structure. If RSI manages to bounce off this trendline once again, it will further confirm the solidity of the formation from a technical analysis point of view. Thus, investors can see that the positive structure continues in both RSI and the price chart. Such reactions in RSI have generally moved parallel to price direction in the past. Therefore, an upward move starting in RSI at these levels could pave the way for prices to respond similarly with upward moves. Especially if RSI rises above the 50 level, it can be considered that market momentum has fully shifted to the bulls. In conclusion, the rising trend structure observed in the RSI indicator represents strengthening happening deep in the market and is an important signal source for investors. RSI is currently trading quite close to this trend line and carries the potential to bounce upward from this level as it has many times before. If this scenario unfolds, it is expected that the price will similarly gain upward momentum. This means buyers will regain control of the market and a new upward wave may begin. Therefore, the RSI's reaction to this trend line will be extremely critical and direction determining. Investors carefully following such structures in RSI and using the signals they provide as a strategic advantage is a very appropriate approach from a technical analysis point of view. The RSI trend line must not be broken.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.